The Federal Reserve just delivered a quarter point rate cut, but the market's reaction, it wasn't something that you would have expected. First, stocks were all soaring, record highs on almost all three indices, and then Jerome Powell started talking and they started dumping. And this is because this wasn't your usual cut because they're boosting growth message that we typically get. Instead, Powell made it crystal clear another cut in December. We're far from it. That one line right there might have just completely flipped markets year end playbook. So the Fed voted to lower rates by 25 basis points. That was exactly what Wall Street was expecting to happen. But inside of that room, things got a little heated. Fed Chair Jerome Powell said that there's this vigorous debate amongst members. One official wanted a much bigger half of a point rate cut. That was probably Stephen Myron. Another said that they don't want to cut at all, so they were all right not cutting. And Powell called it strongly different views, but the real story was his warning. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. And that's Fed speak right there. You got to read between the lines. He's pretty much telling us don't bet on more rate cuts just yet. And though it's probably very likely we're going to get another rate cut in December, they just kind of want to keep their options open. So the irony here is that Powell admitted that the economy hasn't changed much since September. Inflation's still sticky, the job market's cooling, tariffs are keeping some prices high. And he said there's no risk-free path for policy right now. If you cut too much, inflation rears back. But if you do too little, the labor market keeps weakening. So it's weird. And all of this is happening while the Fed's data stream is half shut down thanks to the ongoing government shutdown. That means, in this case, that the Fed is still flying blind, making trillion-dollar decisions without their usual economic dashboard. But there was one major move beneath the headlines. The Fed announced it's officially ending its 3.5 year effort to shrink its $6.6 trillion balance sheet, and this will start December 1, so on the 1st of December. And that's huge. That means no more passive unwinding of pandemic stimulus and a subtle shift back toward adding liquidity. And they'll keep letting mortgage-backed securities, these MBSs, roll off their balance sheet and replace them with these short-term treasuries. So the translation here is that the Fed just ended QT, that quantitative tightening era that we've been in. And in the markets, liquidity is power. So meanwhile, the data chaos continues. The Atlanta Fed's GDP Now model shows the economy is surging at a 3.9% annualized pace. But the number might be way, way, way too high because the shutdown has frozen much of the data that the Fed relies on. And Goldman Sachs says that the number is probably much closer to 3.3%. Pantheon Macro says, forget GDP, watch payrolls. Watch that jobs data. And unemployment's up to 4.3%. Layoffs are up 66% year over year. And Challenger data shows that we've had the highest number of job cuts since 2020. The labor market isn't collapsing, but it's thinning out, and it's doing it very quickly. But before Powell spoke, what we've seen is that all three indexes were on track for record highs, and then the tone completely flipped. Nvidia briefly hit $5 trillion in market cap today. Huge. It's the first company to do that. It's bigger than entire S&P sectors. Microsoft also crossed 4 trillion for the first time ever, with Apple right behind it. But Powell said, we're far from it, and momentum cooled fast. And then traders realized the Fed may be trying to slow walk this easing cycle, especially with Powell emphasizing that some members want to wait a cycle before cutting again. And they could just be talking. But on the international front, Trump is set to meet with Chinese leader Xi Jinping tomorrow, where they'll discuss rolling back some tariffs in exchange for China cracking down on fentanyl, chemical exports. And if this is successful, it could lower the average U.S. tariff. Currently, everybody's expecting on Chinese goods from around this 55% figure to possibly even 45%, and potentially even cool global trade tensions, which everybody wants that. And meanwhile, South Korea is set to announce a $350 billion investment package into the U.S., and Japan has just pledged up to $550 billion, including nuclear and AI projects. So the world's money is still pouring into the U.S. even as the Fed steps back, and that's looking good. So, y'all, where does all of this leave us? The Fed's cutting rates, but warned it might pause next month. The economy looks strong, but that may be an illusion caused by this missing data because we're still in this blackout. And the labor market, the one the Fed cares about the most, it's still quietly softening. So what everybody needs to be watching is on November 5th, we get ADP jobs report. What they say, is that every Tuesday now? And then December 11th, that's the Fed's next meeting, or is it the 10th? That's the Fed FOMC's next interest rate decision. So if Powell sticks to far from it, we might see a market that has finally priced in uncertainty and or begins pricing in uncertainty and not the stimulus from the Fed that they thought they were going to get. So the main takeaway we got here is the Fed just gave the market a dose of tough love regarding rate cuts because they're not guaranteed, and the era of easy money might not be coming back as quickly as everybody's hoping for. So what do you think? Do you think the Fed's going to cut rates come December, or do you think they're going to try to pause and really try to stick out the rest of the year without cutting again? So that's what we got today, everybody. A lot of news, a lot of news. But yeah, that's what we got. I'll be back to talk about it tomorrow.